Greetings, Learn to Earn community. Today we're going to be briefly looking at the FedNow instant payment system recently launched by the US Federal Reserve and see how they can positively work together with stablecoins to not only ensure the growth of the US dollar, but its future demand and technical capabilities. Unlike consumer-facing apps such as Venmo, Zelle, or PayPal that allow for instant peer-to-peer payments, FedNow's infrastructure that allows only registered banks and credit unions to move money instantly under their system. More than 50 financial institutions are early adopters of FedNow and will be using FedNow immediately. These partner banks include popular banks such as JPMorgan, Wells Fargo, and People's Bank. FedNow's purpose is quite simple. It's to provide a safe, efficient, and instant payment infrastructure for individuals, businesses, and financial institutions within the United States. So this is interbank again. One of the key features of FedNow is the real-time interbank settlements, which operates 365 days a year, 24/7, and allows for the instantaneous transferring of those assets and will be made available to the recipient. FedNow is just an update to the previous FedWire system, as well as the automated clearinghouse that many are familiar with, the ACH transfers that you see when you do a direct wiring transfer through your bank to an individual. However, individuals are not able to directly work with FedNow. However, they still have access to the faster payments processing as long as their bank or credit union is a member of the network. The other two key features of the FedNow system is its unmatched security and resiliency, as well as its interoperability. Now, the security is coming from its legacy systems and large network under its major banks, as well as its long existence before the technology and computer age as well. So you have a lot of experience in all steps into it leading up to the FedNow system. And with interoperability, you're going to get access to some of the largest financial institutions that are under the Federal Reserve system. It's important to note that FedNow is a payment rail and not a CBDC. Now, FedNow operates like plumbing. It moves the water, which is the currency, to where it needs to go a lot more efficiently than it used to. So you can think of it as like updated plumbing, whereas CBDC is the water itself. It's its own currency and its own different entity, not like the Federal Reserve. Now, stablecoins, on the other hand, are a cryptocurrency designed to minimize price volatility by being pegged to a stable asset, such as US dollar, euro, or a commodity. So they aim to offer the technical advantages provided by digital assets while also providing a stable store of value. Stablecoins offer an array of use cases, which includes remittances, cross-border payments, as well as a medium of exchange in DeFi protocols. It's important to note that FedNow uses a conventional payment rail system and does not utilize blockchain technology of any sort at the moment, which leaves a big opportunity for a lot of Web3 protocols to provide their solutions where institutions see fit and gain access to the enormous network that these banks provide within the United States. See, the FedNow payment rail system and stablecoins such as USDC and USDT, which are globally recognized and pegged to the US dollar, are not in competition as they fundamentally operate on different technical aspects here. You have a payment rail versus a currency which operates in many different funnels, as we discussed earlier in the video. And that operates as an ecosystem and not competition, which a lot of people need to understand. And they need to operate well together and set the example for the next generation of finance for this to move forward in both the consumer and institutional level. Thank you for tuning in to another segment of Learn to Earn, and stay tuned for more topics to come in Web3 that are bound to affect your life some way or another, whether you know it now or you find out later.